Welcome to today's webinar in the Knowledge Mile series, part of the Lord Mayor's lectures on behalf of Alderman Professor Michael Mainelli, whose theme for his mayoral year is Connect to Prosper. In this free online lecture series, we address the connections in and around the square mile, what Michael likes to call the world's coffee house, and how these might help to tackle future global challenges. I'm Professor Tim Connell, Chairman of the Gresham Society and a Fellow of Gresham College here in the City of London, and a liveryman of the Stationers' Company. I'll be convening this session and moderating the questions and answers after today's lectures. So this is the plan for today. A couple of moments for myself, the keynote presentation from Marco, and then we'll have about 20 minutes for questions and answers. So I'm delighted today to welcome Marco Baldini, Executive Vice President at Terap, which specializes in ensuring that cross-border payments are borderless, seamless, and regulated. But first of all, Marco, can you tell us something about yourself?
Thank you very much, Tim. Thank you for the invitation. Yes, I'm the Executive Vice President of Terap, an electronic money issuers and payment institutions active across the world. I'm a solicitor by background, and I'm a professor of financial services law in Italy and in the UK. I started my career in law firms, and I was a partner of a US law firm until 6 months ago, when I decided to join Terap as their head of regulatory and governmental affairs. I trained and qualified in Italy and in UK, and I spent my last 10 years in the UK, and now I am between Milan and UK.
Well, that sounds a very nice arrangement, I have to say. I love Milan. Okay, now, so can you tell us more about the bright future of cross-border payments and why this should be an exciting time to be part of this transformative journey? Over to you.
Sure, absolutely. Thank you. So first of all, just a very, very quick introduction on Terap. As I said, Terap is a payment institution or an EMI in certain countries. It's a global payments network for money transfer. We essentially we are active in, I would say, all the principal and main countries in the world, but predominantly we are very focused on Europe. We have an EMI in Italy, in the UK, where we have a payment institution, in Singapore, where we have an EMI, and we have regulatory approvals in every angle of the world: Africa, emerging markets, Latin America, Asia. The idea behind Terap was the idea who came from 4 co-founders. They are still very active in the company, of trying to reduce as much as possible the transaction fees for movement of money, and also to be able to move money in real time. And last but not least, to get more people involved in finance and in money movement. This is something that is very, very important for Terap, which we will discuss later on, as essentially is financial inclusion. Terap is a very regulated entity, and as such, we are always aware of the importance of very high standards in terms of new products and new adventures. If you can move to the next slide, I think it's number 4 or number 5. I think one of the reasons why I accepted the invite today is because obviously we are living in a world where the future of cross-border payment is, in my opinion, greener than before. The ability to send and receive payments across border is now no longer a luxury. It's, in my opinion, a necessity. And in fact, what I will do, I will explore with you the cross-border payment, focusing on 4-5 main topics. The first topic, we will focus essentially on where we are today, why we're talking about cross-border payments, where we are in terms of numbers, in terms of transactions. The second point, we will discuss a little bit more about financial technologies, so how technology is shaping the future of cross-border payments. We will talk about the role of financial inclusions and the regulatory landscape for EMIs and payment institutions. and also the impact of central bank digital currencies on the payment institutions. There are obviously great opportunities. In fact, we are talking about the bright future of cross-border payments, but there are also challenges. And we'll have a very quick overview also of the challenges that institutions involved in cross-border payments will face in future or are facing already today, in these days. I will move on to the first point of our presentation, which is the current landscape. So essentially, to appreciate the future of cross-border payments, it's important to understand the current landscape and where we are. Today, sending money across border is still, for many people, a very expensive process. If you think about traditional payments, for example, they can be slow, they can be expensive, and they can rely on multiple intermediaries. So, for example, a report available on internet made by the World Central Bank reports that the global average of cost sending money stands around 6% for some corridors, even higher than 6%. That means that, for example, if we imagine a worker that decides to send $200 every month from the place where we work to his or her home country, over the course of a year, he or she might lose around $150 just in fees. This inefficiency is clearly not just in terms of fees and money. So it's just not an inconvenience. It's a significant burden, in my opinion, on those who can least afford it. So this brings us to the most important question of this presentation: how we can change this. So the answer lies in the title of our presentation. The answer lies in the future of cross-border payments and in the developments that are reshaping cross-border payments in general. Changes that, again, could minimize disruption in terms of fees and in terms of inefficiency. But also, I would like to stress, being a regulatory lawyer, these new cross-border payments world that are reshaping our future in terms of money remittance could also become more secure, could also become more safe, and could also help regulators in general to spot fraudulent transactions much more easily than traditional banks can do. First, let me dive into the technological advancements, if you can move to the slides, that are essentially making a new environment. The most significant one is clearly the rise of blockchain technology behind many sectors, DLT. Blockchain clearly is something that is very disruptive, and we haven't seen as of today the potential of blockchain in the payment industry. So, for example, what does mean for cross payment being able to use blockchain? Means two things essentially: that everything can be settled in near real time with reduced fees and greater transparency, and that the pre-funding model, which is the basis for the payment institutions, will become less and less necessary with blockchain, making available to companies a much broader spectrum of activities they can do with their money rather than using them to pre-fund movement of money as well. The cost of savings for this reason are really, really important and substantial, not just in terms of fees, as we were saying, but also because the efficiency of this process will be higher than what we see today. In other words, the technologies can minimize essentially frauds, but also can minimize the level of fees that every single transaction costs, and can predict and mitigate currency fluctuations, which again, in the payment industry, FX and currency fluctuations is one of the biggest problem and deal. If you if you imagine, for example, a place where your payment is routed through the most cost-effective and quickest possible path automatically, or where through blockchain or artificial intelligence you have a stabilized currency volatility mechanism, obviously exporting goods abroad and using these intermediaries will facilitate your business and will make you life much more easier in terms of prediction of costs and fluctuations. This is something that as of today was nearly impossible. With blockchain, we are seeing an increasing interest from a regulatory perspective on FX rate and mechanism to stabilize FX rates. Many of you probably already know that FX rate manipulation is one of the hottest topic at the moment in the market, especially in those markets where FX rates have historically been under a huge debate from a regulatory perspective. I'm thinking, for example, countries like Africa or some Asian countries where regulators dictate rules, but very often we see players or let's say not really players, I would say, but companies that try to go around FX rates. At the moment, it's nearly impossible to monitor all these transactions for regulators. With DLT blockchain, FX rates manipulation will become probably something that will disappear gradually because there will be stability. And don't underestimate the importance of what I'm saying, because the vast majority of fees related to remittance obviously are based on FX rate. That would push intermediaries to rethink about the business model, obviously. In terms of financial inclusion, as we embrace these new technologies, it's important to remember the goal that these payment institutions, many of them at least, have in mind to create a more inclusive global economy. Today, roughly speaking, about 1.5 billion adults are unbanked. So essentially, they don't have a current account. And the reasons are the most diverse, because they don't know how to open an account, because they don't have a credit history, because they are in some remote area where it's very difficult to reach a bank, because internet is not available. Many of these individuals, as I said, are in developing countries where the access to traditional banking is very limited. However, we are seeing a revolution thanks to the payment world and to blockchain. Mobile money services, where the movement of money is real time. We have big examples in Kenya, Tanzania, Uganda, Ghana, for example. Mobile operator, which started as a simple text-based platform, now allows millions of African people to send and receive money, pay bills, or even access credit and insurance, all from their mobile phones without the need to go to a bank. And as more people gain access to mobile phones and this kind of infrastructures, the potential for financial inclusion grows exponentially. And I think this is the real point of this presentation. The bright future of the payment industry lies not only in the new technology, in the advancement of blockchain, in the fix of the various FX rates fluctuations, and in the speed of the movement of money, but in the fact that cross-border payments plays a crucial role in financial inclusiveness. For example, remittances sent home by migrant workers are often a lifeline for families in developing countries. And by reducing the cost and increasing the speed of the payments, we can put more money directly in the hands of those who need the most. And the rise of blockchain and digital assets allows individuals in countries with unstable currency or restrictive financial systems to participate actively in the global economy. So I think this is a point that we cannot underestimate, in the sense that financial inclusion is something that, thanks to this new wave of payment institutions, technologies, and new instruments, can really play an important role in the development of new regulations. We will see towards the end of the presentation how regulators are following this path in terms of financial inclusion, in terms of new rules and regulations for payment institutions. I think it's essential, though, that we invest not only in technology, because otherwise it will be another wave of interesting new technologies, interesting new products, and then nothing substantial will change. But we also need to invest in education and infrastructure. In other words, regulators, infrastructures, and educational establishment, they need to work all together with players in the payment industry to make sure that we have a coherent and cohesive world where everyone plays its role. This is where I think public and private partnership can play a very critical role, because by working together, we can ensure that the benefits of this innovation reach everyone and not just a privileged few. We will look at this later on in my presentation, but think, for example, of something like the regulatory sandbox, which is something that in the UK started, if I don't remember wrongly, around 2018, and then was rolled out in other European countries around 2020, 2021. Is essentially the possibility for new startup or for new products to be tested in a safe environment with the regulator before getting a full license. That was a clear example of what we are saying today. New technologies, new payment industry, a lot of advantages, but still a gray area in terms of how we regulate those players. The regulatory sandbox was exactly thought for that reason. You come to me, regulator, and I tell you what to do for a period of 18 months. And then if you're ready, you get a license. If you're not ready, you can leave the regulatory sandbox, rethink your business model, and then come back, rather than apply immediately for a very burdensome license, which will oblige you to put additional costs on your company in terms of resources, in terms of fees, and so essentially will diminish the efficiency of your project. And that was a clear example that the UK made in a very good way, in my opinion. In the UK also, we had a very interesting report called the Khalifa Review, which I'm sure many of you already know, which gave a clear indication to the UK on how to even improve the efficiency of the regulatory sandbox, using, for example, a scale box, or what other measures could be used not to lose the perfect spot in which the UK has been for the past 6 or 7 years, namely one of the top fintech industry. And in that report, which is a very long and detailed report, one of the key messages was we need an environment which work together, public and private, to make sure that the regulations are fit for purpose. So I think this is a very, very important part of our discussion, the regulatory harmonization and transparency. One size doesn't fit all, and this is something that the payment industry is experiencing very, very thoroughly. The other point, and I would like to close here the high-level presentation I wanted to give you on how cross-border payments are becoming increasingly interesting, because I want to give you also space for questions and add on top of this presentation a couple of real life examples that we are seeing in Terap. So you can have real life examples of how this bright future is coming. I want to spend a couple of words on the last point I mentioned during the introduction, so the role of central bank and digital currencies, because obviously a very important development on the cross-border payment industry is also the rise of the central bank digital currency. We all know that central banks around the world are exploring the potential of issuing their own digital currency, which could, in my opinion, revolutionize not just payments, but also monetary policy. The central bank digital currency, why is it important? It's important because technically speaking, offers potential advantages in the payment industry. For example, they provide a stable government-backed digital currency that can be used for cross-border payments and transactions without the need for conversion. We briefly spoke at the beginning of the presentation about FX rate and the importance they play in the payment industry. The use of the central bank currency could really simplify the process of making international payments and reduce the costs associated with those FX and currency exchange. Moreover, I think it's important to stress that central bank currency could also enhance financial inclusion. Why? Because they will provide a digital form of money that is accessible to everyone, regardless of whether or where they have a bank account. This is very relevant in those countries I mentioned at the beginning of my presentation, with a large unbanked population. But, and this is my personal view, perhaps the most important part of the central bank currency, but the interesting is the potential to improve the efficiency of monetary policy, because clearly central banks could use digital currency to implement monetary policy directly without the need for additional intermediaries. So the wave of changes and the momentum and the context in which the payment industry is moving is obviously very important. And the discussions around central bank digital currency is, in my opinion, one of the best possible push that the industry can have. Obviously, this could create for sure a more stable and efficient international monetary system, will reduce the reliance on traditional reserve currencies, and will enhance the global economy. But it's not all, in my opinion, it's not fair to say that the bright future of payment industry with, we said, technology, regulation, financial inclusion, support by central banks is bright and full stop. Obviously, there are also challenges, and I think in my view, it's very important to be aware of those challenges, to make sure that those challenges could not undermine the trajectory of the payment industry. Which are those challenges? So obviously, in my view, the important challenge that we face is cybersecurity. So the rise of quantum computing, for example, could pose a threat for the cryptographic security of current payment system. But it's also true at the same time that it opens the door to developing new quantum-resistant encryption methods. Hence why I say that it's important to see the challenges, because if you see the challenges, we can start already developing something different and new that will prevent a disruptive approach later on. Also, similarly, as regulators have started thinking about new regulations and challenges and try to oversee a rapidly evolving payment landscape, there is actually an opportunity for regulators to develop a more flexible and adaptive regulatory system. I mentioned to you very briefly the regulatory sandbox, but the regulatory sandbox is just an example of what regulators could do differently to regulate in a more agile way the payment institution. Another challenge, for example, is the fact that we move towards a digital world, and we must ensure that everyone has access to the tools and the basic knowledge needed to participate. And again, this is where the educational establishments could play a very important role. And finally, and this is something that I am doing a lot as part of my researches, It's we embrace these new technologies without sometimes thinking about environmental consequences and impacts. Blockchain, for example, has been criticized, as we know, for its energy consumption. And as we scale these technologies, I think we must prioritize sustainability, and we must ensure that the future of the payment is not only efficient, is not only well regulated, but is also inclusive and environmental friendly. Um, you can easily understand from this presentation that there are many concepts and many topics interconnected to each other and not easily digestible, obviously in one session only. But I just wanted to make sure that you understand that the bright future of the payments, especially the cross-border payments, is really there. The technologies are developing very quickly. The regulators are aware, and they are changing the regulations to make sure that they have proportionate regulations for the payment industry. And I think central banks are also trying to push towards this direction. But also there are challenges related to this. And to make sure that we overcome those challenges, we need to have educated people, and the public and private, let's say, relationship needs to be stronger to make sure that we have a very consistent approach towards new payments infrastructures, new regulations, and that we are aware of the challenges that we face from an environmental perspective. I will close here saying that we all know that in Europe we have an important regulation which is called ESG regulation, which obviously looks at, among other things, environment. There is a debate at the moment at European level on this specific regulation to try and clarify many aspects included in the regulation that are not applicable to some of the new technologies developed in the payment industry sectors. And this obviously is very interesting for two reasons. The first one is because we talked about how regulators adapt their regulations to the new technologies. If you think about that, the way the regulators typically issued regulations in the past 6 or 7 years was always the same. They tried to figure out the topic, they tried to predefine everything through definitions and to clauses, and then the regulation was ready to go. But now, in the payment industry and the new technology in the new technology world, everything drafted in this way is already out of date. And ESG is one example. MiCAR for cryptocurrency is another example. By the time the regulation is out, there are already new technologies that make that regulation old. And so the regulators need to update the regulations, annexes, Q&As. So the question is, are these new technologies pushing the regulators towards a new way of regulating? For example, the principle-based regulations, which in the UK is something very common, is probably the best possible solution. Yes, I think so. We can define principles, and then the new technology will tell us what had to be regulated. So there are a lot of things that payment industry is stimulating in terms of debates, and I think this is clearly a place that we need to watch very careful in future. I think I will close here the comprehensive presentations, and I'm happy to go into the details on some of the 5 topics I have quickly touched today in case there are questions. And if there are no questions, obviously I have a couple of points that I wanted to stress, real life examples that I wanted to share.
Well, I think the real life examples would be very interesting for us all. So we'll come back to those perhaps just before we finish. But it's interesting, the first note I made was about the regulators. The famous question as to who guards the guards themselves. Can we ask, who are the regulators? Are they located locally, or are they sort of in London or New York? Or how does this work? And to be blunt, does it work?
Sure, thank you. Thanks for the question. So, in very general terms, regulators in the payment industry and I want to be clear, when we talk about payment industry, we are not talking about, or we are not talking exclusively on cryptocurrencies or digital assets only. We are talking about payment institutions in general that move money across wallets and across players. I'm saying this because naturally regulators are central banks. In UK is the Financial Conduct Authority, the FCA. We have Bank of Italy, AMF in France, BaFin in Germany. So those are the traditional regulators that historically regulated banks and financial institutions. But why I'm saying that is an interesting question, because there is a debate at the moment about the fact that it's probably now time to think about a specialized regulator, someone that has the knowledge to legiferate on these specific products. The Khalifa review, which I mentioned to you, which I strongly encourage you to find on internet because it was a fantastic report made by Mr. Khalifa, is clear on that. He's saying the regulator should be aware that they need to hire people not only from a regulatory background, but from an IT background, tech, quant, math. They need to have people skilled in different sectors. And I have to say the vast majority of regulators, certainly the FCA, certainly Bank of Italy, they have started hiring a lot of people in different sectors to be sure that they could regulate in a proper way these highly technological companies. But again, the debate is, do we need a specialized regulator? And this is also important because you will remember we talk about the fact that one size doesn't fit all. If I am a regulator that historically I have regulated big banks, obviously the risk that those big banks pose to the market are different, not higher or lower, are just different compared to a payment institution. And the criteria we use to regulate those payment institutions will probably be influenced by my experience in regulated banks, which typically they have different systemic risks. So to answer to your question, those are the regulators. Does it work? I think it has started now working in the sense that these regulators are now much more refined than they were in the past, and they have some very skilled individuals. And the regulators have started hiring from the private sectors people who used to work in the payment industry to have highly specialized workers within the regulator.
Well, that's very encouraging. Now, getting on to some practical issues here. Dan Feeney tells us, lucky man, he's just been on holiday in Croatia. The only thing being that he paid the equivalent of 12% to withdraw cash, 6% ATM fee, 6% currency conversion fee. So as we go ever more cashless, how can we alleviate this extortion on the tourist? Even the locals are paying 6% to withdraw the euro in many markets across Europe. So that's a practical issue at the moment.
Yeah, and I think this is a very important point, and this is something that I very briefly touched in my presentation. I think the idea of institutions which operate in the cross-border payments is exactly like this. So they have started their activities with the idea to reduce those fees, interbanks fees essentially, and to make sure that the amount of fees paid by people using digital essentially money, or more in general, not using the traditional bank channels, were as such that would encourage people to use those intermediaries rather than traditional banks. But here, I think the most important point is the following. Even in the question and in the answer I'm giving now, we can easily see that we are used to think about banks and non-banks, making very clear that there is a sort of competition in a way. But the reality, in my opinion, is that if we want the payment industry to be successful, we need to make a big cultural change. Banks need to understand that the competition for them is very important to improve the efficiency of the processes. How they can do that? They have two choices. They can work with the competitors to create a system which is more efficient, or they can embed into them the structure, the infrastructure, the technology used by the other competitors, and making sure that the level playing field is there. In 20 years time maximum, I'm sure 100% that the traditional bank will work in a completely different way, because the payment industry will be so agile, so quick, and so cheap compared to traditional banks that will never exist. Take, for example, instant payments like instant bank transfer. In some jurisdictions, instant bank transfer made through a bank has a cost of around 15 euros per transaction. Plus, you get debited 2 or 3 euros when you receive money in your bank, which total around 20 euros. Real-time payments within the payment segment, with the payment industry, is pretty much free. And this is due to the model used, so the pre-funding model. So what I'm saying is, I think to answer to your question, we need to make a better use of the alternatives we have to banks, or we need to wait until the cultural change will happen and banks will realize that it's no longer possible to work in an environment where you are charged so many fees. The main reason is because there are many intermediaries, essentially.
Now, Greg Skrosnick has come up with an interesting one. How does Overledger enhance interoperability in cross-border payments, and what challenges exist in scaling its implementation globally?
Yes, interesting and very technical as well. I think the 2 points here. I think interoperability is very important if we see that, in my opinion, not only as a possibility to send money across countries in different places or in different currencies, but if we see that as an ecosystem in which essentially there is a sharing of data, in the sense that I can put together a sort of system in which for the amount of data I get through these interoperability systems, I can be much more precise and refined in, for example, spotting fraudulent transactions or avoiding false positives in my ML checks. Because I gather more and more and more and more data, and my transaction become much more fluid, reliable, efficient, and I can reduce through economies of scale my fees. But the challenge here is that from a regulatory perspective, it's very difficult to have a very strong interoperability system cross-border. Why? Because you don't know if you need a specific license in Uganda to move money to Mexico. And you don't know if in Mexico you need a license to move something to Italy, or you don't know if the fragmented way to regulate payment activities is something that you have to take into consideration in this type of transactions, or it's just a matter of defining your transaction at the starting point, the origin point, and then the flows is something just automatic and mechanical. So essentially, the advantages are, in my opinion, more on the economy of scale, on the amount of data, on the reliability, the safety, and what you can do with such a big scheme. But obviously, until we will get a very, very consistent regulatory framework, it will be difficult, in my opinion, to get a proper interoperability scheme. For example, there is a confusion around the definition of payment services. In some countries, they are defined as payment activities. In other countries, there are payments. So unless we have a consistent approach, I see that quite a challenge. So the regulatory bit, in my opinion, is the biggest challenge.
Yes, that sounds like the key element. Now, Gordon Clark has sent us quite a technical one here. I'll go through it slowly. Do you think Nexus, conventional IPS, or CBDC is the most promising approach among those BIS and or SWIFT, which are pushing to improve cross-border payments?
So yeah, I think personally, I think Swift is probably is something that we should look at very carefully, because I think they are doing very interesting things in terms of cross-border payments, interoperability, and improving the efficiency. They have been around for quite a lot of years now. Yes, it's also true that they are a sort of association or federation. So in my opinion, they probably need to um, look for a little bit different status if they want to be the predominant ones in the space. Uh, I think also for the technology and the language used, so for the code, Swift is probably an advantage. CBCD is probably the second in line. Technologically speaking, I think they are quite advanced. But yeah, my view working with some of those people is that at the moment, at least, Swift is probably the one, the most promising one. This is my personal view.
No, very, very interesting. We don't have much more time for questions, but you did stress the importance of training. I did say who guards the guards themselves. My next question is who teaches the teachers?
Yeah, very, very good. So I think again, we have seen, so in the past 10 years since I started teaching, I've seen an increasing numbers of people claim to be fintech experts, just because fintech was a very sexy word to be used for finance. And I think it's such a technical and new area of law that again, we need to make sure that we have people who are properly trained. And in my view, the best possible way to train those people would be for them to have a multi-faced approach to these matters. So I give you my personal example. I started as a lawyer looking at these new regulations. I worked at European level to draft the legislation and to give my proposals. I help clients to overcome regulatory challenges, but my learning curve working in the industry has been impressive, simply because I got in contact with tech people, IT people, finance, accounting people, helping me to understand how these models work. So in the fintech industry, more than in anything else, it's important that people who teach, in my opinion, have a very robust and in-depth training on several aspects of the fintech industry. It's no longer an era where you study something today and you can teach for 20 years exactly the same thing. Nothing will be like that. Things change dramatically. I mentioned the way regulators used to issue rules and regulations is now no longer possible. They need to change the way. One good example is the Artificial Intelligence Act the European Union just enacted. For the very first time, we have annexes which, although definitive, will be completed by the year after year, depending on the technology. And we have a risk-based approach, which does not predefine what an artificial intelligence is, but essentially assigns level of risks. So to make sure that you can develop whatever you want, you only have principles here that guide you, hence the principle-based regulation. So yeah.
Well, as a fellow professor at City University, might I ask you, would this be part of an undergraduate program, a master's program, or intensive short courses?
Yeah, I so also I'm happy to be here with some of. I'm an honorary visiting professor at Bayes Business School as well, and I'm in touch with some banking law professors there. And I think the view I have is that this must definitely be an undergraduate course. And I know sounds a little bit weird to say, considering the complexity of the subject, but we need to remember that one of the points I raised was the fact that we need to educate people. And I think people in the undergraduate journey are probably the most important resources we have to make sure that they start thinking in a way that gives them the tools to then go deeper and deeper in the knowledge. A basic fintech course, undergraduate level, would give them the basis to then understand a little bit more payment industry or cryptocurrencies or blockchain. We can no longer pretend that study fintech in 6 months will give you the overall view of what fintech is. Fintech is a very complex and evolving subject. We need to give at an undergraduate level the strong foundation and basis. Only after the basis, those people will be able to digest and understand the technicalities of more specific modules.
Right. Now, we're just coming to the end, but you said you're going to give us a couple of examples from your own experience. Could we have those before we conclude?
Sure, absolutely. A very quick one. I can give you an example which, in my opinion, makes very clear the importance of financial inclusion and how regulators are looking at the payment industry. So, Terap is very active in emerging markets, in African countries, and we are experiencing, as other competitors do, a lot of changes in the regulations in those countries. However, very often it's very difficult to predict in advance the changes that will happen because of the way those regulators work locally. So what we have done, and what other competitors I know are doing, essentially we have decided to take licenses and be fully established in those countries with local people and with local colleagues there who know the culture and the systems, and to get a direct contact with the regulators there without without those people there locally, and without a direct dialogue with the regulators, we could not even think for a second to be successful in those countries. But more importantly, what happened was that those regulators started asking us, Terap, to help them to understand the framework and develop in the possibility of developing a more robust set of rules. And that is exactly what I mean when I say that there must be a sort of consistent approach. Developing countries, which historically have been less aware of these new developing technologies, are the countries who need this the most, because are countries where access to traditional banks is not so obvious, is not so easy, also geographically speaking. So I think this is a perfect example of the way you can give something and you receive back a lot of interest, a lot of support. And let me say that in my experience in those African countries, you get, for many reasons, the best possible technologies. They are very advanced. They need resources. We invested in those countries because we thought that there was a need, and we are receiving back a lot of support from the local regulators. I'm saying this because obviously this is a fil rouge with financial inclusion, which I said at the beginning. They are not probably the most interesting countries from a business perspective from day one, but they will become, and essentially you are getting in exchange not money, but a lot of support and interest to develop something for the benefit of the whole country.
Very, very interesting. Thank you so much. I'm afraid we can't really take more questions, but I would like just to mention first that if you're interested in this topic, you might look elsewhere among the Lord Mayor's lectures for related topics, such as sustainable finance, dispute resolution, and fintech. So we've covered city-type subjects quite thoroughly. Now, just coming up, Wednesday the 4th of September, Neuro-Inclusive London. Again, neuro items. Fair number of those amongst the Lord Mayor's lectures, so do go and look at the ones we've already done. 5th of September, getting kids to care about culture, looking about the technical sides of getting children to perhaps widen their view of the world. And then a further training item, 10th of September, revolutionizing training with human-centered and ethical, would you believe it, AI. And we have an awful number of lectures. No, it's not awful, we have a great deal of lectures on the subject of AI, which is moving so fast it isn't actually boring. So thank you very much indeed to you all, the audience, for your interest and for supporting the Lord Mayor's lectures. We're grateful too for support from Terap. And of course, thank you very much indeed to Marco, because to have access to someone who's been so heavily involved in this area, I think has made this an extremely useful session. May I also give a plug to Bayes Business School, because it's part of City University, which has recently changed its name to City St George's, University of London, because we've just merged with St George's Hospital in Tooting. So this lecture, all our lectures are recorded and posted on the Gresham Society website and on our YouTube channel, in case you'd like to revisit anything, including the question and answer sessions. And we hope to see you all again soon for another lecture in the Knowledge Mile series. And don't forget, the Lord Mayor's theme for the year is Connect to Prosper. Thank you and goodbye.